Hello, everyone, and welcome back to the new Blueprint strategy course. And welcome back to the last module, which is the strategy optimizer. And today we're going to cover lesson 2 of the strategy optimizer. And today we're just going to talk about the equity indices a little bit. And as we can optimize as we optimized gold last time, similarly, we can also optimize the equity indices as well. So the process on how we're going to approach this from either a top-down or a monthly basis is going to be exactly the same. And I'm just going to run you through the S&P 500, and then it would be exactly the same for Nasdaq as well as the Dow. And I'm just going to show you a few things here. So first of all, let's do a strategy optimization here again for the S&P 500. And first I have to add the strategy. I have to add the Campus Optimizer, and you can do that while I'm doing that as well. Because I'm also quite intrigued on how fast this is going to go for your specific machines as well. So please do that while I'm doing that. And then you can also let me know the timing that it spits out, the estimated time of completion it spits out for you guys. So at the moment, we're looking at the S&P daily chart, and I just want to do a complete optimization. So I want to do a layered optimization, a top-down optimization, where I'm going to try and get all of my questions answered in one go, right? So I'm going to ask, give me the best calendar month in combination with the best trading day, in combination with the best holding period, in combination with the best stop loss that I should be using. So we can do that all at once. Remember, that's going to take some time again. So let's see how long it's going to take for the S&P 500. For gold, last time as we did it, I think it roughly took us 5 minutes. And so if I'm going to do that for the S&P, we're going to start at the top here though, and we're going to walk through all of these inputs. So remember, we're either telling the computer what to look for, so we're giving it an input, or we are asking the computer what the best answer is. In this case, we are querying something, we're asking something. In that case, we would optimize a certain result. All right, so in terms of number of contracts, S&P is a futures contract, so we would just have a 1 here. In terms of long versus short, here we also want to decide on whether we want the computer to do buy positions or short positions. In this case, we input 1 as we want to look for buy opportunities. Start calendar month. Here we would now look to optimize because we want to ask, hey, what is the best month? What is the best month from 1 to 12, 1 being January and 12 being December, that we should be buying the S&P 500 in? Is it going to be January? Is it going to be February? We don't know. So we're going to ask this question, optimize the best trading month for us to be buying the S&P 500 in. End calendar month, remember, we always keep that at 0. Start trading day of week. This is something we could optimize. Maybe we'll do that later. Here we are asking, give me the best weekday to be buying the S&P on. So should I buy generally on Mondays? Should I buy generally on Tuesdays or on Fridays, whatever it may be? We shouldn't confuse that with start trading day of month, which is basically going to be our 23 trading days. And since we don't know what the best trading day in any of those months is generally, we can just ask, well, give me all trading days from 1 to 23 with 1 increments in difference. And now I have 2 layered questions. I have asked 2 questions that are now going to be combined. What is the best trading day of the best trading month, right? Maybe we'll have a 5th of May that's going to be great. maybe we'll have a 10th of November that's going to be great. So it's a layered optimization, and so we're asking the computer all these different queries all at once. Now, end trading day of month, again, all the end inputs, which is end calendar month and end trading day of month, we want to keep that at 0 for now. Seasonal, here we're gonna tell the computer how many years to look back. So we could look back 10 years, we could look back 15 years. I found that looking back 10 to 15 years is optimal, as we don't go back too much into the past. However, sometimes also 20 and 25 is just interesting to see what also worked, and very much going back into the past. Now, holding period, should we hold those specific trades, those specific trading days of those specific trading months? Here we could also optimize that. And if we're optimizing that, we want to keep the exit at first profitable open off. Okay, as there is a 1 here by default, it will be automatically off, which means I'm telling the computer now it's fine to look for holding periods from maybe 0 to 15 trading days. If I was to put a 0 here and I would have the exit at first profitable open on, there would be a logic error. You would still get results, but it wouldn't be as accurate because the computer is not quite sure of whether it should take the first profitable open or whether it should actually look for holding periods. Since we're actively looking for holding periods, we want to keep that off, okay? Stop loss percent, remember that's only applicable to stocks. And then stop loss dollars, here, I don't know what the optimal stop loss should be, so I can optimize here as well, which then is going to be anything from 1,000 to maybe 3,000. And I could put here 500 to 3,500 or whatever it may be, right? Whatever you think would be an optimal stop loss. And then you would ask the computer to test that maybe with $100 increments. Okay. Well, maybe just to make the calculation a bit quicker, let's just ask it to do $200 increments rather than $100 increments. So now I have multiple questions that I can get answered in one go. So basically what I'm asking is, give me the best long opportunities for the S&P overall, right? Looking at all the different criteria that we could look at. Look at the entry parameter in terms of the trading day, what's the best trading day, what's the best trading month, and then look at also what's the optimal stop loss, and then what would be the optimal holding period as well to find the best trades for the S&P for us. So I can press OK. I want to have an exhaustive count. So you can see the test count number here is 48,576. If you're doing that with me, you should here get exactly the same number. Okay, so if I'm optimizing now, I'm now getting 3 minutes, 2 minutes, just under 3 minutes for the computer now to run and give me the best trades that I should definitely note down for the S&P 500, which is quite fast. If you guys were to follow Jan, for example, if you were following, maybe you can tell us how long it takes from your end doing the same optimization. One hour. Okay, talking about fast internet. Well, it could be a combination of internet and also your computer's processor that you're working with. So again, I have quite a good computer. So even though it's old, it's quite powerful still in today's standards. So my estimated time to completion is gonna be sometime quicker. So 1 hour, if you were, for example, to do that, then let an optimization run maybe in the morning or in the evening, and then you'll get the results in the next morning. But usually, if you have a quick internet connection, then you should be fine with the computer. It shouldn't take 1 hour. So we can now just wait together on the line here, and it should be done any minute now. And then what I'm going to do is I'm going to get the strategy optimization report available for us, and then we're going to take a look at that together. All right, here we go. So we already can see the computer did something, and it's already visually showing us what it perceives to be the best trade overall. So it seems to be taking a trade in and around March. Let me do something here in terms of the my axis, just to make that a bit bigger for you guys. Right. So it seems to be taking a trade in and around March here. And there seems to be quite a big holding period here as well. What we don't see visually is the kind of stop loss it took. But what we see visually is kind of the entry date, right? The 29th of March. And we also, if we were to count the candles, 1, 2, 3, 4, 5, 6, 7, and so on and so forth, we would also see the kind of holding period that it's looking at here too. And so I would see that for all the trades in the past, it triggered exactly the same trade last year as well, which was again end of March, and then we got stopped out with that specific stop loss eventually. It triggered that trade also in 2021. Here also, that trading day is also the end of March, and then the same kind of holding period. And here in this case, we would have stayed in that trade and took quite a big run up. The year before, after Corona, same thing, 2020. Also, we took the trade here. We held for the same amount of days, and then it took the exit at the first profitable open of whatever the holding period was at that stage. Here, it also seemed to be quite a good time to be entering also in 2019. We got quite a nice move up here overall. In 2018 as well. In 2017, we can see we would have been stopped out here. And in 2016, again, it seemed to be quite a good time to be holding overall for a little bit of a longer period of time. So I could now go back as many years as I had optimized for, right? And we could spend a lot of time on that. But we could also now go into the strategy optimization report. Okay, so you have two reports. One is the performance report. You don't want to look at that. And then there is the optimization report. The optimization report, however, is only made available to you if within your customization of the strategy optimizer, you also queried something. Okay, if you also asked a question, if you also press the optimize button, only then you'll have the optimization report. So now we have, again, all of our columns up here. So we have the calendar month, we have the trading day. This is going to be our holding period. And then we have our stop loss parameter as well right there. And the results in terms of net profit, which is gross profit minus the gross loss. We can see the total trades it took, we can see the total winners, the total losers, the accuracy, the max consecutive loser, which is again our strategy breaker column. We don't want that to be higher than the median. Then we have our max winning trade. We usually don't want our max winning trade to be also very large here. We don't want that to be an outlier. We want it to be within the median somehow of the usual bell curve here, because if it's an outlier, it just means that our net profits here are also slightly skewed. So as it's 20,000, in this case, the gray highlighted rows here, we can see that oftentimes price seems to be within the 20K max. Sometimes it's a bit below, but most of the time it's kind of in and around that 15,000, 20,000, 28, 15, 14, and so on and so forth. So not a big outlier, but quite high, I would say. Then we have our max losing trade. Of course, our max losing trade is whatever our stop loss was, which here is, it took 3,000 as the optimal stop loss during that time to stay in most trades. We can see that 8 out of 10 were winners. So with using a $3,000 stop loss per contract, we can achieve an 80% accuracy here over the last 10 years. And then we see an average loser versus average winner. And then also we get a risk to reward as a result. And so here the risk to reward is also quite high, above a 3-point mark, as it takes the average loser, not the stop loss overall. So now the computer highlighted this row for us, which is also the trade that we see visually displayed down here. Okay, so it means that we're entering on the 21st trading day of March, and we're holding for 14 days using a $3,000 stop loss. Now, what is a $3,000 stop loss, you may ask? You can just open up the contract cheat sheet, find S&P, find the point value, which is 50. Now, to get the points, you divide your point value by your stop loss amount, which in this case was 3,000, right? So 3,000 divided by 50, 60. So our wiggle room in terms of entry to stop loss is 60 points. Now, remember, the computer is going to enter at the open of the 21st trading day, which was right around here. And then it would have used 60 points as a stop loss, which would have put our stop loss right around here, right? So 4,050 to 3,990, this is 60 points. And so we have a stop loss right there, and then it's going to hold for 14 days within that optimization. So that seems to be a solid trade overall. That's definitely something that we should write down, right? Doesn't get much better than this. In March, towards the end of March, we want to buy and we want to hold for 14 trading days using a 60-point stop loss, or in other words, a $3,000 per contract stop loss. But let's also look at some other potential trade ideas the optimizer is giving us here. So, and how I would go about that is I would go about sorting by net profit. So what is happening now, all these threes here, 21, and this is basically the same trade over and over again, but with different holding periods and different stop loss criteria, which means that, you know, if I use less wiggle room, it just means I may get stopped out more often, but And as I get stopped out more often, I make less net profit as a result. To here I have 48,000, and here with a $2,000 stop loss, I only have 39,000, right? Why is that? Well, because I had 6 losers here, 6 winners as opposed to 8 winners. So I had 2 more losers. Now, I would just then scroll down, right, until I see maybe a different month today combination. So I could scroll down all the way here, right? And so I'm testing basically the 200 best combinations. We could test for more, but you could see on Jan's side, it already took him 1 hour. So you probably don't want to test a whole lot more. For me, I could probably test a little bit more, and then I would just have to wait also a little bit longer. But already the 200 best tests should be pretty solid, just to get an idea of, hey, what are the month-day combinations that I for sure want to mark down in my calendar, and that we want to trade year after year after year and after year. And yes, they're not always going to work out the same way. They're not always going to be profitable. There's going to be losers here as well, but overall, they should have solid KPIs in terms of win-loss and in terms of your risk-to-reward proposition. So the first time it kind of changes the month-to-day combination is here as it switches from March to November. And then all of a sudden, I'm getting 3 different Novembers that are showing here. Now, I could, of course, also just sort by November, by the month here, right? And I would see all the November trades now, followed by all the October trades. So I could also do that, of course, and then see within the November period, okay, it seems like November, the 4th trading day, that's kind of a solid trade. When do I have the most accuracy and the highest profit? Well, it seems like 2,800 and or 3,000, they're both the same. So 2,800 seems to be the sweet spot here. I would double click that, and now you can see our trade before was here in March visually, and now it's moved here to November. So we're getting that visual help now in terms of, hey, what does that trade may look like? So on the 4th trading day of November, we want to enter with a $2,800 stop loss. So 2,800 divided by the point value 50 is 56 points. So this is the 4th trading day in November. I'm entering at the open. I'm using a $56 stop loss, which would put my stop loss roughly to here. And then I'm holding for 14 days. And my result is, well, 8 out of 10 times it's profitable. I have 2 losers. My average, my max winner is not a big outlier here. It's only 15,000. Then my average winning trade is 5,100. So it's a lot less though than my average winning trade was before. So it's maybe not as good of a trade as we had before, but it's also a solid trade. And that makes sense too, right? In November, we have the Thanksgiving rally and all that good stuff. So November is usually a good time for us. This just gives us the sweet spot in terms of when in November we should be buying. So if I'm going to look at this specific trade idea here, and I'm going to go into the past again, I will see how that worked out in the past. Here, it was kind of a net zero sum, right? We didn't make much, but we didn't lose much. Here, it was quite a solid trade, maybe a little late, but here still solid. This was in 2020. And then here also quite a solid trade. Of course, now with Corona here to my right, this is a bit skewed. So also here, quite a solid trade that the computer took. So overall, again, quite solid trades here, something to mark down in November. Very interesting trade. And of course, there's one in October as well. There's going to be one in June. There's going to be one in May, right? There's going to be a good trade that we can find in all of these months. So let's again sort by our net profit, and let's scroll down again. So then the next best one, it seems like it finds it in June, right? So we went from March is a good, we went from March 21st is a good trading day and month combination to November the 4th is a good trading month, trading day combination to now. Maybe we should also look at June. And it's kind of interesting to see that June as well as March, generally, the end of the month is extremely strong. So that's also something that we can test later on, is what does a month generally look like for the S&P? Is usually the beginning of the month strong, or is usually the end of the month strong? And how does it look from a month to month, case to case basis? So lastly, we could check all of them. You could check all of them. I just want to check one more. Let's check also June. So in June, it seems like we have a nice trade on the radar right there, which is going to be the 21st trading day in June, holding for 12 days and using a $2,000 stop loss only. $2,000 divided by $50 point value is 40 points. We enter right there. We use 40 points, which is roughly here. And then price goes up, it goes back down. It's fortunately creating a demand zone in the process. And then from there, it's just rallying. And then we're taking the exit right there. So that was this year. Then this was the year before, which was a stop loss, but seemed to be in and around a good period if we had just maybe used a little bit more wiggle room here. Here it was kind of a solid trade. I've seen better, but could have been worse. Here it was beautiful, right? This was a beautiful trade, end of June, and then we hold for 12 trading days, and then we exit. Probably could have held for longer, but there's the trade-off, right? Some years we could have held for longer. Other years it was the perfect exit. Like this year, for example, we had seen the perfect exit. So it kind of taking the average here on what's overall the best. Here as well, pretty solid entry here in and around June the 21st. And we're getting a pretty nice rally here as well. So overall, also I would say a solid trade. 8 out of 9 are profitable that it finds in the past. And there must have been just one year where it didn't find a 21st trading day in June, which is why it's only showing one here in this instance. And we could continue to play this game, and we could continue to play this game and just look at these different trades at these different months. We could look at March, we could look at April, we could look at May, we could look at June, we could look at October, we could look at November, and so on and so forth. So that's a top-down approach. And as you guys saw, the top-down approach, for me, roughly it takes 5 minutes usually. For you, it may take a little longer. So what you can do if this just takes way too long for you, right? You can try another top-down approach with the optimizer. Okay, that's going to be a little bit more manual labor involved in that, but it's also quite interesting to go through that process of manual labor to A, understand how the optimizer works and functions, and also B, to get more insight about the markets that you're trading and that you love to trade. So let's change our optimization approach a little bit. Let's say, rather than optimizing everything, let's for a minute look at all calendar months. without differentiating between the month we're looking at. So I'm not telling it to look at August since we're in August. I'm not telling it to look for September since maybe I want to look for September next year. We could also do that. We could ask the input. I could say 0. If I put a 0, it would look at all months. Okay, and now if I have the 21st trading day here of the month, it would look at the 21st, how the 21st trading day, the results the 21st trading day generates on average for all trading months, not differentiating between January or December or June or July, right? So it looks at all of them, and it always looks at the 21st trading day, and generally how well or how badly does the 21st trading day perform. But now I could also say, well, give me 1 to 23. Look at all trading days for all the months there is in a year. And again, look at the last 10 years. I don't want to look at the holding period. And I don't want to test a holding period. So I want to now look at exit first profitable open, because what I'm now really interested in is I want to ask, what is the best trading day of the month for all months combined, not differentiating between the months? And as it comes to the stop loss, here we want to use a pre-optimized version of the stop loss. Now you may ask, how do I pre-optimize? Well, pre-optimization just comes from doing the top-down approach and just seeing what number pops up a lot in terms of your profitable scenarios and the stop loss that usually is chosen for those profitable scenarios. So a safe one for the S&P is 2,500. Okay, we could go as low as 2,300 is oftentimes also a safe one. So that would be a pre-optimized stop loss, because you saw, okay, usually we're operating between 2,000 and 3,000. So if we do maybe the middle, also looking at the average true range, that price usually moves, and halving that, because we may get a wick on that day or so, or a little bit of a sell-off in the beginning before then the market rallies. We usually get between $2,000 and $3,000 per contract stop loss. So anything that we use here should be fine, because I'm just trying to get a top-down understanding now. And later on, as I'm then honing on to the day-month combination, I can then still optimize the stop loss later on down the road. So I can always fine-tune that later on down the road. So now you can see this is basically taking not a whole lot of time now. And we can also see the amount of trades that got placed here, right? Because we're trading, we are looking at basically all trading days for all months. And what it's now testing here is we're having the trading day 1, 2, 3, 4, 5, and so on, all the way to 23 for all the months combined. And it seems like, looking at the past 10 years, the middle of the month seems to be the strongest. But it also seems like the beginning of the month, as well as the end of the month, usually is also quite strong. Okay, so definitely what we can now understand is, well, if we're trading the 11th trading day overall, we should have a pretty solid strategy, a pretty solid day strategy, as I have the highest accuracy here. But I could also say, well, the beginning of the month looks solid, or the end of the month also looks quite solid. But let's stick to the 11th trading day for now. And let's see which 11th trading day is the best. Okay, so I could now say, the 11th trading day of the month, I want to focus on that. And I want to see if there's one month in specific, now distinguishing between the different months, that I should focus on when trading the 11th trading day of the month. Everything else is the same. I go back 10 years. I use a $2,500 stop loss. I use first profitable open, and so on and so forth. Optimize, again, that's very quick. And now I can see that, well, it's a few months that I should definitely do that. And it's a few months that I should definitely not do that, right? So in November, that seems like a pretty good idea overall, to be buying and then exiting the next day for a little bit of a day trade, right? We're now looking at the likelihood of us getting a rally within that day and then exiting the next day as we open in the profit. So it seems like that usually works out pretty well with just a little bit of a rally. And then also, as you check that now visually, you could also visually check, well, as I'm checking this visually, do I see that usually there's a holding period? If you do that visually, then you could then also, your next step could be, well, let's check for a holding period as well. So it seems like that day specifically is usually rather strong. 11th trading day in November. Why is that the case? I have no idea, right? I have no idea. So it just is what it is, right? And so things like that just get a little bit better of an understanding about the markets that we trade, things to note down, things to write down, and things to further potentially optimize. Because now we could say, well, on that day, if that is now a day trading strategy, right? Like, let's say, for example, on that day month combination, so the 11th of November, I always want to do Globex traps to the upside, right? So I want to buy Globex traps. And so you could say, well, what's usually the stop loss that I should take on those day month combinations? Well, we know that a $2,500 pre-optimized stop loss is kind of sound, right? Because we get 10 out of 10. But can we do better than that, right? Because let's say there were a couple of losers there, and let's say we wanted to do better. Let's say we were in February now, and let's say we wanted to do better than 9 out of 10. Well, what's the second best? Actually, the second best is here. This is also a 10 out of 10 in April. So let's just stick to November for now and just go through the motion here of continuing to fine tune and continuing to optimize. So now we're optimizing a stop loss. And here we could optimize again from 1,000 to 3,000. And here I'm now going to do $100 increments. It's fine. I'm only optimizing one thing at a time, which means there's no layered optimization, right? There's not combinations of optimizations. It's just one at a time, which usually is rather quick. So now it would tell me that from a $1,600 stop loss onwards, I'm already looking at the same result than what I have looking at a $2,500 stop loss on that day. So I can further fine tune and I further kind of get an insight of what usually happens that day. Seems like we don't get a big drawdown on those days generally for whatever reason. Quite interesting to know. And lastly, what we would do now, and I've never done this specific optimization before, so I'm not sure if there's going to be now a good holding period that comes out of this. But if we're now testing on top of that the holding period as well, and notice how if whatever is underlined in gray, it will automatically take into my inputs right here. So it now took in the $1,600 stop loss. So I don't have to change that. It did it. We're looking at the 11th trading day still. We're looking at November still from before. So now I'm optimizing my holding period. And to do so, I first need to turn the logic off. and then 0 to whatever, 15. And now what would we get? Well, it seems like I did a mistake. That's what it seems like, because I'm getting the same results, and that can't be. I'm using the wrong. So stop loss percent 0, exited first profitable open needs to be a 1, and then the holding period from 0 to 15. Now it seems like, well, it's rather a pretty short-term trade, right? Because the longer we hold, right? If we hold for 1 day, 2 days, 3 days, 4 days, 5 days, 6 days, 7 days, and so on, all the time, first of all, our accuracy goes down, but also our overall profit goes down. So usually what should happen is, if our accuracy goes down, and at least our overall profit should go up as we're catching some good waves. But in this case, it's just a short-term trade, right? And so now we know the 11th trading day, well, the 11/11 is a pretty good day with very little drawdown on that day, to be buying for a day trade. Now, what we could also do is say, added strategies. Let's take a little bit of a different approach. Now, I'm going to tell the computer to look at August only, right? Because we're in August. It's cool for me to find nice trades in November and in January and in March, but I don't care right now. I want to see what's going to happen this month. So I can tell the computer, hey, start at this month, and then tell me what this month usually looks like. So first, again, I'm going to optimize my trading days. I'm looking back 10 years, and I want to test the first profitable open with, again, a $2,500 stop loss. And now I would get my best August trading day of the month. So it seems like the beginning is quite weak. Then it's still kind of low red numbers, but the fourth trading day is kind of solid. And the best trading day is, again, the end of August. So it seems like towards the end of August is when we should see the best trading day to come into play. So something to note down is that, look at 18 and 19. What a beautiful day to potentially buying the S&P 500 this month. Now, the question, of course, is, well, if I'm going to buy the S&P on those months, right, on those days, here we get 2 green days. Is it going to be a day trade? Just a little bit of a green candle here. Is it going to be a day trade, or is it again going to be potentially a longer term trade? We don't know that yet, right? Also here, pretty solid green candle. Also here, a pretty solid green candle. Also here, a pretty solid green candle. So why is it that way? I have no idea again, right? As I told you, usually the end of the month are days that are usually strong for equity indices. If you continually test a month, each month in a row, then you'll notice that usually the beginning and the end are the most powerful, right? Usually. And that's just because you have all these 401k, all the funds, all the retirement funds that usually load their money unload their money into the markets towards the end of the month and towards the beginning of a month. So usually those days tend to be stronger than the other days of the month. And that may be a little bit of a bro science explanation, but that's the best I can come up with at the moment. So let's say we want to buy on the 18th of August. The question now is, what's the kind of stop loss again that I should be using for that specific trade? So then again, you can go in, start trading day of month is now 18. We're looking at August, looking at 10 years, and now we're gonna we're gonna do a stop loss variation, and I'm gonna do at the same time, I'm gonna ask it to do a holding period as well. So this should be rather quick. I'm only optimizing 2 things together. Even that for me is quite quick to do so. So what I can see, what's the best scenario in terms of net profit is holding period of 1 day, right? Holding period of 1 day. 3 days is up there, but then I get quite a lot of losers as well. And here we go. Now that makes more sense. Okay, so the best holding day stop loss combination for that specific trading day and month combination seems to be holding for 6 days and then using only $1,500. It means that we're wrong more times. There's not a 10 out of 10 anymore. But when we were right, we were racking up quite a bit more profits as we have done prior to that, right? And so 6 seems to be a good one with all the different stop losses, seems to be solid. 15-1 may also be quite interesting. The last 2 years weren't that great. The last 3 years weren't that great. Here it was quite all right. Here it was quite all right. So it seems like that may be quite interesting, but definitely in terms of just the net profits, right? If I stay with the net profits, I don't even have to go down to 15, because why would I hold for longer and make less profits? Doesn't make any sense, right? I want to hold for shorter and make more profits. That makes a lot more sense than then also looking at the longer holding periods. So now I also have maybe a little bit of a nice trade on my hands for August. If you know, if we also get to buy towards the end of August in higher quality demand area, for example, we may have a little bit of a longer trade on our hands, maybe 6 or more trading days, and using a $1,500 stop loss. It doesn't get much better than that. Seems like regardless of what we use, even if we use the $3,000 stop loss, we would still have 7 out of 10 trades that are accurate for this specific case. Okay, so how would you do the same thing for Nasdaq and Dow Jones? It's exactly the same process with exactly the same pre-optimized stop losses. So use $2,500 as a pre-optimized stop loss for all equity indices and go through the same process, as anyways, you'll get very similar results on your optimizations. So now, by now, you know gold, right? You now know equity indices as well. And the same thing we could now do for crude oil. We could do for natural gas. We could even do for Forex markets as well. right? And something that you want to note down is, and it's always the same process. Your pre-optimized SLs, right? So you have gold, and your pre-optimized stop loss for gold is $1,800. Then you have your equity indices. Your pre-optimized stop loss here is $2,500. Then you have crude oil, which your pre-optimized stop loss is $2,000. Then you have natural gas, which your pre-optimized stop loss is $1,800. Then you have your Forex futures, okay, Forex futures, which your pre-optimized stop loss is $1,600. Did I miss anything? And then you have other markets like, for example, other precious metals that are extremely volatile on a day-to-day base, which then you have to kind of figure out what a pre-optimized stop loss is. But usually it would be above 2,500 US dollars. And so there's no right or wrong here, right? When it comes to the pre-optimization, you can always use that as a starting point. And then further, as you get a little bit more of an understanding and you also visually checking what you're testing, then you can say, well, do I need a little bit more space? Do I need a little bit less space? And so on and so forth. But these are for sure very solid starting points that you could use. Now, stocks, for example, you would use the percentages, and you would use between 3 and 5%, depending on how volatile the stock is, right? If you're trading something like Apple, 3% is more than enough. If you're trading something like Tesla, then you may want to optimize for 5%. Or if you're optimizing for Baba, then you may want to, have pre-optimized. You want to start at 5%, and then further, as you do the optimization, fine tune your stop loss along the way. All right, so for you guys that are online at the moment, is there anything else that you would like me to answer, to cover, that you haven't quite understood, that you need a little bit more clarity on? And we can finish it at that with maybe a little bit of a Q&A. Yes, so these are your pre-optimized stop losses for the markets that you're optimizing. And that's always a good starting point that you can use if you need a pre-optimized stop loss. And then further along the line, as you go and ask more questions, more specific questions, then you can always fine tune the stop loss later on down the road. Does that make proper sense to you? Yeah, so for gold, you would start at a $1,800 pre-optimized stop loss. Yeah, that would be your starting point. So it really boils down to what approach you want to be doing, right? You want to do the very first top-down approach where you're saying, I'm just going to optimize everything at once, which in this case, you're optimizing for the stop loss anyways right away, right? But let's say your computer can't handle that. Let's say you're fine, you're not fine with waiting 1 or 2 hours, then what you can do is you can follow a step-by-step optimization approach where you're first looking at the best trading day of the month, then you're looking at the best stop loss of that best trading day of the month, and then you're looking at the best holding day for that specific stop loss for that specific best day of that specific month, right? So you kind of do have a stair-stepping approach where you start asking questions, and the more questions you ask, you already have the inputs of your previous answer, so you can kind of build your case that way, and then the computer can easier handle this, and it's going to be a lot more quicker. But ideally, I would say in an ideal world, you're just going to run everything all at once and then kind of look through the best trades to get an understanding, and then do a month-by-month case of what you should be doing, what's the best trading day of that month for that product. And then for the month-to-month case, that's when you need a pre-optimized stop loss to at least start the journey. Does that make sense? Yeah, I know, Trevor, and I'm aware of that, and we're struggling to find a solution for you specifically on that. But they're still figuring out what kind of code they could send you that would do a kind of an error control on your machine, right? That would tell us what's the issue with you specifically, because out of everyone, it works for everyone, and I just have no idea why it wouldn't work for you still, right? But what they're doing now is they're working on a code that you can have run that's then going to tell you what specifically is the issue with your case. So Jan, you're asking a very interesting question. Let me just read that out for everyone. How do you take your US election impact on this tool, since pre-post years have an impact? Yes, absolutely, right? So pre and post years, they're going to have an impact on the S&P 500, for example. So you definitely want to take that into consideration, where you get a variation between what the optimizer tells you and what the yearly roadmap would say. And ideally, you want to have somewhat of an alignment, right? You don't want to have that completely mismatched. But in a case for gold or in a case for crude oil, you don't really care about the pre-election stuff, because anyways, we would look at the yearly seasonality a lot more than the election cycle. So specific to equity indices and stocks, yeah, you would kind of want to overlay that, so that, for example, in August, if the first 2 weeks of the roadmap are bearish in August, you want to take that as your priority information, and then whatever the optimizer tells you would be kind of a second layer of seasonality. But for sure, you're right in stating that the yearly roadmap has priority over what the optimizer would do in that specific case. And then if you have alignment though, then it's time to go all out, right? Well, I would say how we're going to proceed with this is, depending on questions that I get within the next days, I'm going to decide whether we need to do one more live optimization with everyone. If I get no questions, then what I'm assuming is that everyone is somewhat fine playing around with the optimizer and just needs a little bit of experience with it. And then we'll cover the rest within the my Tuesday's market outlooks anyhow. All right. Thanks for joining, guys. Happy and safe trading, and I'll catch you all soon. Ciao.